Hello, I'm Russell with Community Financials. Our business helps make self-managing HOAs and condo easier by providing monthly accounting and administrative help nationwide. To further help self-manage boards, we're starting a video series called Ask an Expert. In this series, we'll pick an industry expert and have them share with us some insights to help you run your community. One of the most confusing and also riskiest aspects of being a community board member is insurance. To help simplify this topic, I've invited Joel Meskin to have a conversation with us. Joel is the Managing Director of Community Association Products at McGowan Program Administrators. He's an attorney who spent 15 years specializing in insurance coverage and related litigation before focusing on the community association industry, primarily as an insurance professional in 2001. He holds a CAI Community Association Insurance and Risk Management Specialist designation, the International Risk Management Institute Management Liability Insurance Specialist designation, and the CAI Educated Business Partner distinction. He's a fellow of the College of Community Association Lawyers, and he's a founding member of the Foundation for Community Association Research think tank. Joel has insured over 100,000 community associations nationwide and has been involved to one degree or another with 6,000 directors and officers claims or more. He is a national speaker, having spoken in 33 states. He's a prolific author and contributor on community association topics, including insurance and risk management and community association governance. Thank you, Joel, for agreeing to talk with our audience today.
My pleasure.
Joel, I wanted to, that's an impressive background, and you certainly are an expert for us to ask our insurance questions about. But today I wanted us to focus on two areas of community association insurance that most lay people and many board members just don't understand much about, and that is errors and omissions and directors and officers liability insurance, also referred to as E&O and D&O respectively. Would you walk us through what those are and why those coverages are important?
Absolutely. The first admonition I would give anybody who volunteers on one of these very unique board opportunities is just say no if they don't have D&O insurance, and basically make sure you understand that, as we'll talk about in a few minutes, that just because it says it's D&O insurance, that it has what you need. And hopefully I'll give you a brief primer on that before we're done and can lead you to some materials that will help you understand that better. First, we have to understand that a community association, which is a not-for-profit entity, manages the common elements that are common to members in a specific community, whether it be a condo, HOA, cooperative housing, single-family HOA, timeshare association, or whatever. Basically, you have an individual property interest and you have a common interest between them. The key to leading us to the D&O insurance is that those entities are not humans and cannot manage themselves. And we don't live in a situation where people are volunteering right and left to do things. So it requires that we obtain basically individuals willing to volunteer their time and sit on these boards and help manage the association. One of our initial mistakes in the whole industry is by labeling the coverage that we're calling D&O should really be wrongful acts coverage, management liability wrongful acts coverage, because what the directors and officers are managers of the association. You have one obligation. That's to manage and protect, preserve, and enhance the association's assets. End of story. So everything that you do on behalf of the association really has to lead back to that main charge. You really won't be able to get any individuals who are willing to do this unless they're going to be protected, okay? Let me first clarify the difference between D&O and E&O. Errors and omissions, also sometimes referred to as professional liability insurance, That's an insurance where you have somebody, generally a licensed individual, a doctor, a lawyer, an accountant, a insurance professional, an architect, engineer. When they're giving services that are professional, that usually requires specific education, then they're going to need to have an E&O professional liability policy. In our world, our volunteer boards, these individuals may be lawyers, accountants, but they're not sitting on the board in their capacity as a lawyer, accountant, insurance professional. They're sitting in their capacity as a volunteer board member. Okay, so what we need in this situation is we need directors and officers, which will provide coverage for them in their capacity as a board member as they manage the association. Okay, every association is going to have some form of governing documents.
Mm-hmm.
The governing documents are going to start out with articles of incorporation, CC&Rs, which conditions, covenants, and restrictions, and the most important really being, for the purpose of directors and officers, are the bylaws. The bylaws basically is the operating manual of the association. A lot of people have this notion that as long as we use common sense, that everything's going to be fine. Unfortunately, judges don't really care whether you use common sense. They care if there are properly enacted rules and regulations, and then you follow them. So, and if any of us have ever looked into legislation, we all know that using common sense to comply with legislation doesn't necessarily, work either. So you really need to understand the rules and regulations and how to operate. In the bylaws, we have the single most important item for directors and officers. And if you don't read anything else, and as a board, you absolutely should read the entire document. You should read all the governing documents. Even if you're not on the board, you should read the governing documents. In there is a provision called indemnification. And when you work as a board member, a volunteer, since you're getting paid so much money to sit on a board as a volunteer, you need to be protected, because you need to protect your assets. Because why would you volunteer? I mean, out of the greatness of people's heart, they may volunteer until they get hit with some type of personal lawsuit or exposure. So in the provisions to basically convince people to sit on these boards, you need to have a good indemnification provision. Virtually all the indemnification provisions are going to provide something to the effect that if you are challenged or sued with respect to any decision or action or inaction with respect to your duties as a board member, the association will in fact indemnify you to provide you with defense and provide you with indemnity if there's a judgment or settlement against you. That is great in theory. The reality is, if you don't have something to fund that indemnification, then you're going to have to rely on the assets of the association.
So like you have to dig into your reserves or your operating account to pay for legal fees, which we know can grow quickly.
Rapidly. That's how I put 2 of my 4 children through day schools and college. So the big issue is either you have the assets or you have to take out a loan. You might have some operating funds, or which associations, their most favorite thing are special assessments.
Yeah.
So if you don't have those other assets, you need special assessments. So how do we fund it? We fund it with the directors and officers liability policy. One of the things that makes directors and officers liability policies somewhat confusing to people is it just sounds confusing, because they don't necessarily know what the directors and officers' role and responsibility is. It's really not brain surgery like many other things. It's just learning the language. As we said earlier, you're there to protect, preserve, and enhance the association's assets. That's the only requirement you have, okay? So what we need is to get a D&O policy that provides you with the broadest coverage. D&O policies can range anywhere from an endorsement that's included in a package, like from one of the direct writers. I don't want to put any names out there, which could be $300-400, or you have to get a standalone policy, which could be $800, $900, $1,200, $1,500.
Is that per year?
That's per year.
Okay.
And so if you say, let's say there's $1,000 difference and you have 100 units, that's $10 per unit per year. That's about 88 cents per unit per year to get the Cadillac policy instead of the embedded policy. And if any of you have had the fortune to hire an attorney, you know that that $1,000 difference is going to get eaten up probably by the time you walk from the parking lot to their office. So our idea with community association board members and the association itself, it's a budget-driven entity. We don't want surprises. We want to keep the costs in the budget it's never going to go down. Anybody that thinks it's going to go down, or you're going to save a significant amount of money that's not going to cause some situation where it's going to jump up to correct it, I think you're living in a false universe. So really what we need to do, it's like a diabetic. You want the blood sugar to stay as level as possible. So what we want to do is provide the best possible coverage. And my admonition for boards, this is a takeaway tip for the self-managed board members, is rely on a community association insurance professional.
Yeah.
They go back to what we talked about earlier. They have an E&O policy. So your job as a board member is to protect the assets of the association. Those assets are basically avoiding having coverage that isn't sufficient, having limits that may not be sufficient. If you use a professional and they make a mistake, then they have E&O policy and you can go after them. So it sounds it's just the way life is in the community association world. One of the things, with the insurance aspect of this, and again, you may have a embedded type of policy that's $250, $300 as opposed to the $1,000 product. There's nothing in any governing document that I've ever read or seen with the 100,000 plus associations I've insured that has a provision saying that a board has an obligation to save the association money. Yet every association, whether it's one that's self-managed, and I think a lot of the self-managed are probably much more vigilant than some of the larger association that have independent management companies where the managers themselves may take some control. Sometimes that's a good thing, sometimes it's not a good thing. But basically, you want to make sure that you're providing the best coverage for yourself and for the association. Because in the D&O world, as you had mentioned earlier, we have two obligations in a D&O policy that you get when you buy it. One is a defense obligation by the carrier, that if there's any potential for coverage under the policy terms and conditions, they will defend you.
So that means you don't have the legal expenses. The insurance company will pay the legal expenses, which is, if we're talking about saving the association money, one way to do that is to prevent these, odd, potentially large expenses that may come up.
Absolutely. And one of the challenges we have in this world, and we can do this at a later time, but just a brief statement is a lot of people think that the matter that is in confronting them is a little minor matter that they're going to be able to resolve and get rid of. The other obligation that you get when you purchase a D&O policy or any liability policy is an indemnification obligation. So if you go through the litigation and there's a settlement and it's something that's potentially covered, the carrier can settle on your behalf. That's indemnifying. That's the indemnification obligation. Or if there's a a judgment. They will pay the judgment, presuming that it's under the terms and conditions of the policy. This is where you really start seeing differences between policies in the D&O world. And this is why you want to make sure that you're buying something that is really appropriate. If you're dealing in a property policy where it could be $50,000 versus $90,000, that's a significant issue that you really have to have a heart-to-heart discussion with amongst the board and amongst your insurance professional, maybe even your lawyer or your accountant. However, when it comes to these small amounts that deal with the management of the association, you really need to not look at price, okay? Because at the end of the day, any claim that you have is going to pretty much zero out the cost of any insurance you have purchased in that regard. However, there's two things that you want to make sure you're covered, okay? And I have a number of articles on this, so I won't get into too much detail. One is called monetary damages, where somebody is suing the association or the individual for monetary compensation, or they're doing non-monetary, which is they're asking that the association do or not do something, change an election vote because they say it's not valid, change their decision with respect to an architectural application for a variance on what you can build or not build, trying to change a rule or effectively have an association that hasn't been enforcing a rule to now enforce it. So that's non-monetary. A lot of the policies that are inexpensive are ones that don't cover non-monetary coverages. 80 to 85% of the claims we see in this area involve non-monetary damages. So you got to really be careful, and you have to ask your insurance professional what is going to be covered under the D&O policy that is embedded or not standalone. Because the one thing that I always ask boards is, when was the last time an insurance company gave you something for free? Okay. And I think we all know and can hear in our mind the answer to that question. They never would. So what I always ask them is, so if you're paying $1,000 for a policy, as opposed to $250 for a policy, is the one who's charging $250 giving you something that isn't in the other policy, or is giving you the same things? It's not going to happen. Those are really the key things. A second tip or admonition I would give to self-managed boards is, and I've never had an answer that's been different than what I'll say right now. I ask boards, when the insurance professional comes in and they hand you their proposal, what is the first thing that every single board member does? You could probably even answer that question yourself.
They look at the bottom line number.
Absolutely. And so what I tell them is, you really aren't complying with your fiduciary obligation if you look at that bottom line number before you know what coverage you're getting and whether that coverage is appropriate. So if you want to cause your insurance professional to have a coronary or something to that effect, tell them, please keep the page with the price in your briefcase, because we want you to come in and sit down and explain to us why this coverage is the best coverage for our association. And if somebody else has submitted a proposal, have them tell us why they don't think that one is the best coverage for us and what is the difference. Once you have those things and you've complied with really determining what would be in the best interest of the association, then you can bring out the price, and then you can have an intelligible conversation with the insurance professional and amongst yourselves as to what is in the best interest to protect, preserve, and enhance the association's assets. If you don't do that, and the only thing you're doing is looking at price, again, there's nothing in any governing documents, there's nothing in any statutes that require you to save money. A lot of people do it because they want to be liked by their neighbors. But at the end of the day, there are going to be some neighbors who come back during that time when there isn't coverage and they have to write a special assessment check and say, wait a second, I'm writing a special assessment check for $1,500, as are the 99 other people in the association. And the difference between the two policies you were presented to was only $1,000. There's something wrong with that picture. Why did you buy the lesser expensive? So really what the board needs to do, and this is one of the, and this really applies to almost every topic out there. The board's obligation is to only make decisions and policy within their collective competency. If something gets beyond that, or if something is normally dealt with in the capacity of a professional, then you want to use the professional. Every association is authorized, whether it's somebody like our host who does financial stuff. There's things that associations need to go to a financial provider. You may have Warren Buffett on your board, brilliant guy, and everybody wants it. Well, I don't even have to go to the meeting. If Warren says we should do it, we should do it. The problem is, if Warren makes a mistake, he's not covered by the D&O policy for rendering a professional opinion. He can help you ask questions and he can help do that, but that's the difference between the E&O policy and a D&O policy. An E&O policy does not provide coverage for professional services. A board is required to basically use a professional to help them really make decisions and support them. At the end of the day, they don't rubber stamp what a professional says, and a professional will say, I will not tell you which way to go. I'll give you my best educated opinion, but you at the end of the day have to make the intelligible decision, okay? And one of the challenges that a lot of boards have, and this really can impact, I'm a risk manager, and it's completely self-serving for me as a producer and writer of directors and officers liability to help the associations govern so that they will never have a D&O claim. So I spend a great deal of my time writing articles, speaking around the country to help people understand what they can do to avoid having a claim. The one reality in our very special community associations, of which I believe we now think there are about 347,000 of them around the country, is that there's always going to be somebody in the community that is going to be a challenge to the rest of the association. And boards, and one of the biggest, as I've indicated, I've dealt with them one way or another, over 6,000 D&O claims. And one of the best lessons that I've learned and that I've taught boards is, and also the fact that I raised 4 teenagers was very helpful, is you just cannot react, because you're going to have people who are hot and bothered by the silliest things. But that's the community association. You really can't get mad at these. You can, but it won't do you any good, won't do the board any good. You let them say their 3 minutes of whatever they can at a board meeting, or they submit something in writing to explain it further. But the idea is to avoid claims. And you avoid claims, then that's going to be a domino effect to keep your D&O insurance lower. And that will, in addition, help you maintain a budget. And
Joel, a question. What's an example of a claim that you've seen for D&O that, our people watching this video, board members, would recognize as a potential pitfall? And if they didn't have D&O coverage, what could be the magnitude of the cost?
Okay. Let me give you an outrageous situation. One of the key things in a community association are, especially single-family homeowners associations, are architectural review guidelines. So people want to maintain, and you move into a community association because you want them to maintain some sense of commonality. You want to make sure that lawns are mowed. You want to make sure that the right colors are done, that you don't get a Jerry Garcia tie-dye house, you know, in a community that really are Spanish-style homes. That's what you want to do. If you want to live in that kind of a place, there are a lot of communities that aren't homeowners associations that you can do that. We had a situation where an individual wanted to install a doggy door. Okay, very well-off community. The lowest houses were in the $500,000 to $600,000 townhomes to over $10 million for single-family homes. Ultimately, they didn't do the few changes that the association wanted to do. A long story made very short, because this could take 2 drinks and a cocktail party. The association had to sue the individual, because if they didn't sue the individual, other association members are going to complain saying, wait, how come that person gets away with that when we can't get away with that? That individual turned around and sued the board for disability discrimination, saying that the only reason the association and these board members were trying to enforce this rule is because they didn't like this individual who happened to have a certain disability. I'm not going to get into it. I don't want to offend anybody, but they had a disability. And this person, who was a vexatious, narcissistic litigant, who this was the passion they had, we won the case. And that's a non-monetary claim, the discrimination, the disability discrimination. It cost us $995,000 to win. That's an outrageous example. But there are a lot of things. 25 years ago, people would go to the association and say, hey, you're enforcing this law against me. You didn't enforce it last year against Bob. I happen to be African American or another minority, and the only reason you're enforcing it against me is because you're discriminating. You know, that's something that's new and trending. And if you have a lot of these embedded policies that are just an endorsement on a policy for D&O, there's a very good chance that they're not going to have coverage for discrimination. Another, and this is sort of I call it a poetic justice lack of coverage. One of the things in our policies, and I put ours meaning the programs that do a standalone directors and officers policy, is we will defend the board for their failure to maintain or obtain insurance when a board member or a unit owner comes in and says, wait a second, that was available, you should have purchased it. Under these other policies that they took instead of the ones they should have purchased, they're not covered for that. Okay? Same thing with breach of third-party contracts. For example, if you decide to fire your landscaper, you decide to fire the pool guy, and if they sue you, claiming that you breached the contract, under the policies, these standalone policies for D&O, they're going to defend you. If you lose, we're not going to pay and indemnify for the breach of contract, because that would really be against public policy, which is another topic for another time. But those other policies aren't going to defend you on those. Okay?
So those are some good examples of D&O,
right.
Non-monetary, for the most part, coverages.
Right.
For E&O, and I know that you said mostly that is for your professionals that are licensed, like, you know, our firm has a number of licenses around the country to provide the services that we do, and we carry E&O as well. So does the association have E&O in order to help boost the coverages that the professional might have, or how does that work, or why would they?
No, this is what you really need to do as a directors and officers. And this goes on to the side of there's risk management, okay? Risk management is comprised of two things for an association. One side is proactive risk management, and that's to cover things that you know are going to happen: wear and tear, hiring a professional, making sure they have E&O insurance, hiring a contractor or subcontractor or a business partner who makes sure that they have their own coverage. And on the other side, you have what we call protection for unexpected perils, which is really the insurance side. So with the E&O, an association, there's nothing for them to purchase as far as an E&O because they're not conducting themselves as a professional. And if you have a manager who is employed by the association or any other employee, they're going to be covered because under most of the, again, standalone D&O policies, employees are within the definition of insured, as are volunteers, as are community association managers. On the other hand, a lot of these sort of slap-on coverages, they only cover directors and officers. They only cover directors and officers on the policy at the time of the claim, okay? Whereas the more broad policies will cover, and this is always a big concern of board members, will cover former board members, okay? So when you leave the board, and some people will stay on the board for 20 years because they're afraid that if they leave the board, there won't be any coverage for them. But that's not the case when you buy the better policies.
So the boards really need to look at the E&O of the professionals that they hire, and that's where they come into to play. Now, is there a example of an errors and omissions of a professional, and what cover? I guess it depends on what coverages you want to see from your professional.
Right. Well, in your situation, you're self-managed. So at least most of the audience. In those situations, then, you're not looking at a manager with their E&O policy. If you decide to hire a manager, and one of the things I always tell self-managed associations is, you can find a size that fits any association. A lot of people say, why should I spend that much money on a management company when I can hire the landscaper, I can do this? But like with any other professional, if you want just the financial side of the management, you can find somebody who's going to do that at a
just
price
like us.
first, right? Like you. Yeah. If you want somebody who's going to provide the employees, who's going to take care of everything from policing the association grounds to make sure trash is picked up, and they may have their own landscaping division. In those situations, you may want to find a management company that it's worth its weight in gold. It's just like a volunteer board member should not be, and believe me, we've seen it, should not be fixing light bulbs on a tennis court, on a ladder, by themselves at night, and they fall off the ladder and they break their neck, and now they're in a wheelchair as a paraplegic. They're not going to be covered under any of the policies. Their workers' comp probably isn't going to cover for that, assuming that that association has workers' comp. And because they say, we don't need that because we don't have any employees. But you have what they call if any type of workers' comp in that situation. So, you really need to make sure, and this is where having a guideline, using a professional, and again, on my website, I have a lot of tools that help people sort of check the boxes of what they need to do, what they don't need to do.
Yeah, at the end of this video, in just a few minutes, we'll tell people where they can go to find those resources.
Right. And, one of the keys on that is, when you volunteer as a board member, you're not an employee, okay? You're a volunteer board member. And one of the biggest problems or realities, challenges we have is board members, again, are there to debate, discuss, and come up with a decision or decide not to make a decision regarding a policy or a rule or the purchase of something, the hiring of someone. They make a decision and then they delegate it. If it's a self-managed, they're probably going to delegate it to one of themselves, who will exit the room. And as I have my caps here, they'll have to take off their board member cap. They'll have to put on their volunteer cap, because when they exit the boardroom with that directive, they're now a volunteer, and they can only do within the limitations that they're given. Okay? They can't, and this is something that I usually do because it's fairly simple, is everybody says, well, Betty, we've all been to her house. She is an incredible decorator. We need to change the lobby of the condo tower. We've decided on these 3 different paints that everybody seems to like. We're going to have Betty go down to the Benjamin Moore and see what they look like in real life. Betty goes down there and she looks at them and she says, God, this is not going to work in that space. And she can't then go and find another one, buy, the necessary amount and go back and start painting. If none of those fit, she needs to go back and they have to start at the drawing board again, because she does not have that authority. It hasn't been delegated to her. They may delegate something, but at the end of the day, the board is the one who has to make the decisions.
Okay. So when you're looking for service providers, make sure that they have E&O coverage, and
let me say one last trap for the unwary. It's amazing because people will always challenge certain things and then they won't even look at other things. Every contract they enter into, whether it's with an attorney, whether it's with a management company, whether it's with somebody, they're going to have some type of hold harmless and indemnification agreement. In your situation where you have, they're self-managed, it's not quite as draconian, because it very often happens in management agreements where the indemnification agreement will basically be unilateral. Basically saying, I'm a management company, we're going to work for the association, and if we, during our providing of services, screw up, or if we're sued because of something you do, you're going to have to defend and indemnify us. Okay? In a perfect world, and there are a lot of management companies who do this, we have what's called mutual indemnification, where the association says, well, if you get sued because of what we've done, we're going to defend and indemnify you. And the management company will say, well, if you get sued because something we did, we will defend and indemnify you. Mm-hmm. As you know, good business people try to leverage and get what they can get in those situations. So they really have to go to a professional again. If you are filing your taxes, a lot of these say, well, we're a not-for-profit, we don't have to file taxes. And, I don't even know what to say usually. Because one of the things I require, and it's sort of for this purposes, we require on our application an FEIN number. Because if they don't have an FEIN number, we know that they can't file a tax return, or a summary or whatever their financial advisor recommends they do if they don't have an FEIN number. And so that's sort of something, and if they don't have that, then they're not going to be properly formed, and that raises a lot of its own issues as well. So there are a lot of checks and balances, and so they have to really not take shortcuts. They have to read things through. Hire an attorney to spend $150, $200 to review a contract. Because he or she may say, wait a second, these 3 provisions, I wouldn't recommend anybody sign this. So go back to them and say, hey, can we work on this? Can we change or make something? And if they say no, then say, well, okay, well, there's another business partner or management company down the street, and we'll just go see what they can do.
All right. Well, Joel, I think you've given us, our audience, a lot to think about today regarding errors and omissions and directors and officers. You've done an awesome job explaining that, and I want to sincerely thank you for sharing your wisdom with our audience. If they want to reach out to you to learn more, how can people find you?
What you can do is go to our website, which is www.McGowan.com. And on there, there's a section on community associations. And in that section, we have resources. It's a list, all sorts of articles on almost any issue you're going to want to do. One of the things I have on there, which they may find helpful, is a couple of years ago, I had my underwriters give me a list of all the most common questions people ask about D&O policies. What I did is I did 2 to 3 minute video responses to each one of those questions. So it's very helpful, especially you can be on a seminar like this where I can talk for 6 days without catching a breath, or all you really want to know is what is a claims made policy, which we didn't get into, but that's a whole nother issue that
that's where they can go to find out more, get those answers
exactly
questions answered.
And they could, they're always welcome to give me a call.
Great. Well, Joel, thanks again. That wraps up today's Ask an Expert video. Keep an eye out for new videos on our YouTube channel and subscribe if you want to see more videos like this, or see the resources page of communityfinancials.com. That's communityfinancial, plural.com. Thanks for watching and have a great day.